There you go. The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Well. Let's make some money. Okay. Get my chart ready here. Today, we on that weed. We on that weed today. What we looking here is the market cap of the marijuana, cannabis, medicinal marijuana, medicinal cannabis space. All right. Canopy Growth, this Canadian company, used to be the market cap leader. Now the market cap leader is TLRY. You have to ask a fundamental person who follows that kind of in-depth news of why TLRY is overtaking Canopy Growth. I don't know. I'm a technical trader, and we buy what looks good on the chart. Okay, which move is the most looks profitable at the moment, and when the chart stops looking good, we get out. We're okay with sitting on the sideline, invested in nothing until a chart comes along that looks like the probability is in our favor to make money soon, like days, if not hours or minutes from now. Okay. And it's barely crossed it, but it did. I mean, Canopy Growth, CGC, had a stranglehold on things. But market cap is the stock that has attracted the most. Let me see. If you could take the shares of stocks and convert them to raw dollars, the one that has sold the most. I don't want to say sold the most stocks because stock could cost $10 for one company, and another company stock could cost 50 cents. And the one that's selling for 50 cents could sell more shares. So it's like it's if you were to take all the shares and convert them to raw dollars, the one that had attracted the most money, or the one that most of the money has been spent on to buy the shares, that's the market cap leader. Okay. Let's go back one. I want to show you where it is in the industry. I think this is what I want. This is bar chart. The site is too great not to use. We are looking at TLRY. For you fundamental folks who want to see some earnings data and that kind of stuff, there you go. But I wanted to show you the industry that it's in. It's in the medicinal, chemicals, and botanical products. It's in the which is also a part of the consumer products within staples. Now, this is the main thing I want you to focus on. The market is going through sector rotation. Money is fleeing from tech stocks, all the big sexy names and tech stocks that made everybody, fabulously happy and much richer over the last approaching 2 years. Oh no, it is 2 years. 2 years this month. For the last 2 years, stock market is done a wonderful thing. And most of that money was made in the tech stock space. Well, there's a sector rotation going on now, and money is fleeing those tech stocks like a house on fire. In fact, most of the purchases in the S&P right now are shorts against the market, or bets that it will go down. Short positions are initiated, or they begin with an actual purchase of the shares that you're shorting, because you're borrowing the shares from the broker. And so that flurry of purchases to short the stock causes the price to go up, but it will come down, because you need authentic expressions of optimism to keep it going up, not pessimistic driven not purchases driven by pessimism. At some point, real bulls have to step in to drive the market higher, and that's not happening because there's a massive rotation going on to the consumer staples space. There's a search for value, okay? A value I'm talking about from a chart perspective. They're looking for industries that have been totally beaten down to irrational levels, and enter cannabis, marijuana, TLRY, you know, enter that space. And here we go. There it is. No, this is cannabis CGC, but I will. Yeah, we'll come back to that. Monthly. Now, this is the big picture. This is destruction, apocalypse. This thing was like 200, almost $300. Let's put it that way, $300. And this is back in September of 2018. So we talking 3.5 years ago, basically. And it has declined. It went from 318 down to this low here of $2.43. Okay. So you take a look at a lot of your tech stocks, it costs $300 and all that. A lot of those are going to be $2 stocks. I hate to break it to you. It's going to happen. And a lot of you are going to hodl your way all the way down to $2 or $3 or worse. Okay. You want to learn about, more about how to look at things another way, the technical way, join my Patreon. It's the cheapest you'll find. People pay thousands, 10,000, 20,000 to learn this stuff. And you won't pay anywhere near that. What I charge per month is you give that to people every day in a super chat. You can't afford not to join. And if you don't, you deserve to lose. All right. So we had this low here in March of 2020. Then we had a nice little rise. And here's the key thing. This nice little rise went up to $68, $70, rounded off. The main thing is, then we had a big correction. But this low here, I think this is the low actually. $4.79 was the low this month. And the low here was $4.41. Yeah, right here. The month of September of 2020. So the point I'm making is the low here was $4.41. The low here was $4.79. And we like to see that. If you're bullish something, we like to see a series of higher lows. We don't want prices returning to unknown levels. We don't want to make history when we're going down. We want the prior low or prior lows to be lower than where we are now. And price broke out. Got a breakout. Got a nice breakout month. We've taken out the last 2 months. And so that's TLRY. Let's look at the weekly. A lot of people are on this. Okay, I was gonna go. No, this is a nice, solid, nice fat week. This is this past week. This one candle went from a low of 527 to 856. That's a nice move just in this week. Good Lord, this thing has moved about 64%, just about almost 64% just this week. What I think happened with this, I have to check, but I think there was a short squeeze. What that is when stuff is going down, you short it, you make money while it's going down. Well, that works until it doesn't. At some point, the stock will reach the bottom. It'll reach the end. And when it reaches the end, those shares you borrowed to short it have to be paid back to the broker. Let me rephrase that. When the price starts going against your bet, the smart traders figure out, wait a minute, this is probably a bottom, because this price is running out of steam and it doesn't look like it's going to make a lower low here. And so the shorts, the people that were shorting it, they're like, I got to get the hell out of this position. I got to get out of this short position. And in order to break the short position, you have to give the broker back the shares you borrowed. So you have to go buy them. you have to buy a long to reverse to break your short. So you have to come into the market and buy the shares. So all of the people who were shorting this had to go long to break that short position, and that's probably what caused this. Okay, that's the likely culprit. All right, I'm expecting this thing to attack this high here at 13. Oh, this is almost $14. All right. And I already think this low was 478. So that's a nice run. Now, I do not expect it to run straight up here. I'm not trying to get too deep in the Elliott wave theory, but we're looking for what we would call a wave 4. So a little bit of a pullback. It might make it up to this area before that happens. A little bit of a pullback and then continue more. That's what I think is going to happen. So that's TLRY. Let's take a look at CGC, which used to be the market cap leader. Had a breakout also. And I think it's going to attack this level. I really do. So we're talking about, what's that, $16 target area from a low of 562. Wow, that's some good money. And this too, I think it's going to have a it could likely get up to this level. It's likely to get up to this level, have a pullback, not a reversal, pull back and keep going. I think that's what we're going to see. Now, the great news is when you learn technical analysis, you learn not to chase. It's okay being late to the party, okay? You got to learn to sit on the sidelines sometimes. Because after this thing finishes its run, when it gets way up here, everybody's going to be talking about it. And then I think it's going to have a correction. It's going to come all the way back. And then we can get it again. Okay. So, but this trend is going to be going on. I think it's going to go on for a while. I think it's going to take out these highs we see on screen. I think in the bigger correction with the S&P and the sector rotation, I think that this marijuana space, this cannabis space, for the people who are offended by me calling it saying marijuana, I understand. I understand the difference. But in the bigger picture, I'm talking about next several years. I I think the money is going to. I think we've started a trend that's going to last several years of money fleeing tech and all the things that ran up for the last 2 years. And that money is going to come to the beaten down industries within the consumer staple space. And these stocks that were the worst are going to become the first. The worst will become the first. Okay. And I think that's going to happen over the next several years. So most of these big, massive, mammoth, scary corrections last between 18 months to 2 years. And I don't see why this one should be any different. But 2 years from now, I think we're going to be wishing we had purchased cannabis, marijuana stocks. I think that a lot of that Bitcoin money, the institutional money that's in Bitcoin and crypto, I think they're going to run like hell. I think 6 months from now, you're going to have many fewer crypto, maybe even 3 months from now, maybe even 90 days from now, you're going to see many fewer crypto channels. Okay, because that money is going to rotate elsewhere, because the dollar has to do its thing. And remember, Bitcoin, when everybody talks about Bitcoin, that price chart they're looking at is BTC, which stands for Bitcoin, / USD, which stands for US dollar. So that price chart is a reflection of the relationship between Bitcoin and the US dollar. The dollar is set up to make a massive, massive run higher. That's going to destroy that crypto space. That institutional money, the smart money, they're going to come to attractive spaces like this where there's a floor, or technically what has proven to be a floor, at least to now. The downside risk is limited here. The path of least resistance is up. But with all those high PE ratio tech stocks, the path of least resistance is down. Institutional money does not hodl. You've been lied to, Neo. You've been lied to, Neo. They tell you, Neo, you can't time the markets. What they mean is what they said. You can't do it. It doesn't mean it can't be done. You can learn, Neo. Join my Patreon. Peace.